Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today. I'm Nathan Hager, joined by Bloomberg's Kriti Gupta. Lots of stocks to talk about, Kriti, including one of the newest in the S&P 500, one of the biggest outperformers in the S&P 500. Good morning.
Good morning, Nathan. Absolutely. This is a company we don't talk about a ton, but I'm betting that's going to change in the near future. Datadog is getting a lot of attention this morning. It is joining the S&P 500, as you said. DDOG is your ticker, trading just shy of $148 a share. Higher by about 9.4%, and that is actually at session lows, which means it was much, much higher earlier. It is replacing Juniper Networks, which is trading a little bit lower this morning naturally as you see that trade-off. So it's going to be interesting to really keep an eye on whether or not Datadog actually continues its gains here. One of the big pieces of this company has simply been the fact that cybersecurity has been a very popular trade lately. So you've seen this, for example, in the likes of Palantir and Palo Alto Networks, among others. Fortinet is another that have been on this massive kind of upstreak. There's a word there.
Sure.
Rally, I think is the word I'm looking for.
Okay.
It's been a week, Nathan.
It sure has.
Words are challenging this morning, which works great for radio. But nevertheless, Datadog shares are higher by almost 10% this morning, DDOG. Now, it's going to be replacing Juniper Networks effective prior to the opening of trading on July 9th. So a lot of folks getting ahead of that. There's a couple of others that we should keep an eye on this morning. FedEx, one of my very favorite stocks to cover. It's such a bellwether of the economy. There's always something happening at FedEx. They've been restructuring for what feels like a million years. FDX is your ticker, higher by 1.3%, trading at $242 a share. Getting a massive stamp of approval from BNP Paribas Exane, getting a double upgrade. How often do we get to say that, especially for a shipping company and especially for FedEx? They are saying that the stock is, quote, arguably oversold. They're saying the firm's relative operational outperformance versus UPS is going to continue. And remember, I'll just remind our global audience here that FedEx had that massive U.S. Post Office contract. UPS had the massive Amazon contract. They have both lost both of them. Amazon Logistics is picking up quite a bit as in terms of a shipping network. So FedEx has been in the restructuring phase of their company's history for way longer than UPS. UPS is doing a little bit of catching up. At least that's the consensus on Wall Street this morning. It looks like BNP Paribas thought it was enough to double upgrade the stock. So those shares are higher this morning to tune about 1.3%. FDX is your ticker, trading around $242 a share. Let's talk about Synopsys, which is another stock we don't talk about very much, Nathan, but we need to. SNPS is your ticker, higher by 6.3% this morning, trading at $556 a share. They are rising after the U.S. lifted their export license requirements for the chip design software company and specifically for those sales in China. It's a pretty big green light for a lot of companies like Synopsys that has that massive China exposure to actually start operating again into that region and doing it in a way that is actually profitable. And so this is a really, really big deal. There you are seeing show up in the likes of Synopsys, but also the likes of Cadence Design, which is another company in the same space that has a lot of that Chinese exposure. CDNS is your ticker there, trading at $330 a share, higher by about 6% this morning. Nathan, I want to just end it very quickly by pointing out that if for international investors who are looking at some of the structural issues that are happening in the UK government right now, there is an ETF for it that I think is encompassing a lot of the feelings around concerns around the fiscal deficit, et cetera. EWU is your ticker. It's an iShares MSCI UK focused ETF. I want to point this out. This was down about 1.3% yesterday. There's a lot going on here in London on the UK side. This is a stock, an ETF, I should say, that you might want to watch.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.